Take it across to Nooresh Merani to get a sense of the technicals of the market now. Nooresh, hi, good morning. Thanks so much for joining us. We're talking about this range-bound market and how it's really boring for traders. Is that the case?
Absolutely. So what we are seeing is no follow-up price action in a lot of names which really break out or break down. So this is classically a formation where we are going through a time-wise correction wherein we are not seeing a deeper correction on the price basis, but we keep spending a lot of time here. And if we look at the last few months, we've been around that 25,000 mark only on a, say, an average basis. So structurally, what we see is the bias is positive because the longer term trend is positive. We've not broken any swing lows. So 24,700 is the first swing low, and the major one being around that 24,000. So we are in this consolidation phase. There could be some rotational moves, or there could be a lot of choppy moves. But for now, what we see is the bias remains positive. The range could be 24,700 on the downside and 25,500 on the upside.
Kunal, hi, morning. Yesterday, it was clearly autos, technology, all of it weighing heavy on the index. But on the other hand, there were those select names from telcos, some of the insurers, HDFC Bank, Reliance, which did manage to hold up. Any trend that you identify sectorally in the markets right now?
Well, frankly, this time around, there is no major trend in the bounce which has shaped up for the index. So, what happens is when a market gets into a corrective phase, and we've seen 5% odd correction for the index, I think 3-4 times in this year itself. But post that, generally we see specific trends in terms of sectors. That's lacking this time around. The last 4 days, 5 days of this bounce for the index from 24,700 odd levels towards 25,200 to 50 odd mark, which you tested a couple of days back. There's been lack of sector participation. So there have been odd sectors which have done pretty well, but then they've lacked the the follow through up move. Even the FMCG indices, which have been considered to be more defensive, even these indices are going through a phase of underperformance. The only good part about yesterday was that large cap names like Reliance, HDFC Bank, etc. I think many of these large cap names started to show signs of some recovery. So at least what we can attribute is that maybe the selling for these larger cap names could probably be over for some time at least, and we could be looking at a reasonable stabilization into these stocks. So expecting the index to remain into a range and something which we've been going through over the last 3-4 days. So 25,000 acting as a pivot, 24,700 as a support, 25,250 as a resistance.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits and then break right through them. Become something more. It's my time to rise.
Hyundai Motor India Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 1,865 to Rs 1,960 per equity share of face value of Rs 10 each. The anchor investor offer period opens and closes on Monday, October 14th, 2024. Offer opens on Tuesday, October 15th, 2024. Offer closes on Thursday, October 17th, 2024. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, SEBI, BRLMs and the stock exchanges.